All right, so today we're going deep on Berkshire Hathaway.
Berkshire Hathaway.
Specifically, their performance last year in 2024.
Okay.
It was a really, really strong year for them. But we've got this Motley Fool piece that's going to help us break down, why it was such a strong year, but maybe even more importantly, why those factors that made it such a strong year might not be repeatable.
Right.
So our goal today is to really dig into what made Berkshire tick in 2024 and understand why that matters when we think about this company as a whole.
I think that's a good goal.
I like it.
It's a fascinating company to study because it is so different from almost every other publicly traded business.
It's not like we're looking at a company that makes, iPhones or sells, cloud services or anything like that.
Yeah.
This is this massive conglomerate, and they own all sorts of crazy stuff.
They do.
Like, just think about it. They've got electric utilities.
Yeah.
They own, a huge amount of America's trains, like BNSF Railway.
Yeah.
They have all sorts of energy pipelines.
Yeah.
Then they've got these brands that you wouldn't even realize are connected, like Benjamin Moore Paint.
Yeah.
Clayton Homes, a big home builder, all kinds of retail businesses, manufacturing, and then, of course, there's this huge insurance arm.
Yeah.
It's really just all over the place.
Yeah, and I think that that's part of what makes it so hard to really get your head around what Berkshire Hathaway is. But the article that we're looking at today, I think wisely narrows the focus to really what drove the outperformance in 2024, and that was the insurance operations.
Okay, so before we get too far, I think it makes sense to take a step back because, Berkshire Hathaway, we see it categorized as a finance company.
Yeah.
But when you look at this list of businesses,
it's hard to see why. Right.
Yeah, it's hard to understand why is finance the primary label that we put on this company.
So it's not wrong. It's just that I think most people think of finance companies and they think of banks or they think of investment firms or they think of credit card companies. Mm-hmm. Things that are a little bit more narrow in scope. And Berkshire is so broad.
Yeah.
But the reason it gets categorized as finance is because the insurance businesses are so massive.
Okay.
You've got Geico, you've got General Re, and all of these other insurance companies that Berkshire owns. They handle an enormous amount of capital. And so that really kind of tips the scales toward it being labeled as finance.
Okay, so it's like the weight.
It's the weight of the insurance.
Of those insurance businesses that kind of pulls it over to the finance sector.
Yeah.
So, all right, let's talk more about insurance because this article really digs into how these insurance operations are essential to Berkshire's overall strategy.
Yeah.
Can we just start with the basics? How does an insurance business actually work? And then maybe connect that to why it's such a big deal for Berkshire.
So at its simplest, an insurance business collects money called premiums from people who are worried about something bad happening in the future.
Okay.
So think about your car insurance.
Okay.
You're paying money every month so that you get into an accident. You're protected.
The insurance company will help you out.
Yeah.
And so they do this across all sorts of different areas of life.
Right.
Now, the key here from a financial perspective is that in between the time that they collect all that money from policyholders and the time that they have to pay out when those bad things happen, they're sitting on a big pile of cash.
Okay.
And that pile of cash is called float.
Ah, yes. The famous float.
The float that everybody talks about.
It always comes up
when they talk about Berkshire.
So what did Warren Buffett and his team actually do with all that float money?
Well, it's a really good question. And the answer is that they basically use it to invest.
Okay.
So they take that money is sitting there, it's very low cost capital for them, and they use it to buy businesses, or they use it to buy stocks, or they use it to do other types of investments.
Okay.
And Buffett's whole philosophy, which we've talked about before, is, finding good companies that are trading at good prices and holding on to them for a long time.
Buy and hold, right? Buy and hold. Yeah. So the float from the insurance businesses gives them this really nice, steady stream of money to do that.
Oh, I see. So it's like this constant influx of cash that's fueling all of these investments that they're making.
Right.
Okay. So the better the insurance businesses do, the more money they're taking in, the fewer claims they're paying out, the bigger that float gets and the more they have to invest.
Precisely.
Okay.
Now, the article goes into some really interesting detail about the financials from last year, from 2024, and it points out that overall, Berkshire had a really good year. Their operating earnings went from $37.35 billion in 2023 to $47.44 billion in 2024.
That's a huge jump.
It's a massive jump.
Yeah.
And the article really zeroes in on the fact that the insurance segment was a major driver of that growth.
Okay, so can you break down for me exactly how the insurance business contributed to that big increase?
So there are two main pieces to this.
Okay.
The first is what's called insurance underwriting operating earnings. And that's basically the profit that they make from the core business of selling insurance policies.
Got it.
And that number went from $5.4 billion in 2023 to $9 billion in 2024.
Wow. Okay, that's a big increase.
It's a massive increase. And it just shows that they had a really, really good year in terms of underwriting.
Yeah.
Now, the second piece is the insurance investment income.
Okay.
And that's the money that they make from investing, the float that we were just talking about.
Yeah.
And that number also went up significantly from about $9.6 billion to almost $13.7 billion.
Okay, so both sides of the insurance business.
Both sides did really well.
We're performing really well.
Yeah.
Okay, so 2024 sounds like it was like the perfect storm for insurance, but the article's title kind of suggests that we shouldn't expect these kinds of results every year.
Right.
So what makes these two things, the underwriting profits and the investment income,
Yeah.
why are those so unpredictable?
So let's start with the underwriting profits.
Okay.
The thing about insurance is that it's really vulnerable to big unexpected events. So think about natural disasters like hurricanes or earthquakes or wildfires. Any of those things can cause a huge amount of damage.
Yeah.
And when that happens, people file insurance claims, and the insurance companies have to pay out a lot of money.
It's like they're on the hook.
They're on the hook for it, yeah.
For all that damage.
And the article actually points out that this has happened to Berkshire in the past. In 2022, they had a $30 million loss in their insurance underwriting business.
Wow.
And in 2021, the operating earnings were way lower at just $728 million.
Oh, wow. So it's like you can have one really good year where there aren't a lot of big disasters.
No.
Yeah.
And then one year where there's a couple of big hurricanes or something.
And it wipes out.
And it just wipes out the profits.
And the gains.
Yeah.
Okay, so what about the investment income side? Is that a little more stable?
It is more stable, but it's still not completely immune to fluctuations.
Okay.
You know, the money that they're investing is still subject to market conditions and interest rates and all sorts of other factors. So even though it tends to be a little bit steadier than the underwriting profits, it can still go up and down by billions of dollars from one year to the next.
And the article gives some examples of that, right?
It does, yeah. It points out that in 2021, they had $4.8 billion in operating earnings from insurance investments.
Okay.
And then in 2022, that number jumped to $6.5 billion.
Oh, wow.
So even though it's more stable, it's not perfectly predictable.
Right. So you're still at the whim of the markets in a lot of ways.
You are, yeah.
Okay, so it seems like the big takeaway here is that while 2024 was this incredible year for Berkshire, and a lot of that was thanks to the insurance business,
Yeah.
we can't really count on that happening every single year.
Exactly. And the article makes that point really clearly.
Yeah.
You know, the fact that they had such a good year in insurance was really a combination of a few things.
Yeah.
They had a relatively quiet year in terms of big insurance claims.
Okay.
And they also benefited from some favorable market conditions for their investments.
Right. So those two things together really kind of created this windfall.
This perfect storm.
Yeah. But there's no guarantee that those same conditions are going to be present in the future.
Yeah. It's impossible to predict.
Now, there was another interesting point that the article made, and I thought this was really fascinating. It said that over half of Berkshire's 189 operating businesses actually saw a decline in their earnings in 2024.
Yeah, that's really interesting.
Which seems kind of counterintuitive given how well the company did overall.
Right. It makes you think that maybe the insurance results were so good that they masked some weakness in other parts of the business.
Exactly. It's like maybe the headline numbers don't tell the whole story.
It's a good reminder to dig deeper.
Yeah. So what do you think the article ultimately wants us to understand about Berkshire Hathaway?
I think the main takeaway is that it's more helpful to think of Berkshire Hathaway as a mutual fund than as a traditional operating company.
As like one giant portfolio.
It's this giant portfolio of different businesses and investments.
Right.
And a lot of that portfolio is driven by the insurance float.
Yeah.
Which, as we've talked about, can be very unpredictable.
Right. Yeah.
So when you invest in Berkshire, you're really making a bet on Warren Buffett and his team's ability to manage all of this complexity and make good decisions over the long term.
So in a sense, you're saying it's almost like you're betting on Buffett himself more than you're betting on any of the individual businesses.
I think there's an element of that for sure.
Yeah.
You know, he's got this track record that's just incredible.
Absolutely.
And people trust him to allocate capital in a way that's going to generate returns.
Okay, so just to recap for everyone listening, Berkshire Hathaway had a really strong year in 2024, driven largely by these stellar results in their insurance operations.
Yeah.
But we've learned today that insurance is inherently a little bit unpredictable.
Right.
So we shouldn't necessarily expect those same kinds of gains year after year.
Exactly.
There are just too many factors outside of their control that can influence those results.
That's right.
And I think the really interesting thing that the article kind of leaves us with is this idea that because the float from the insurance businesses is such a big part of what makes Berkshire's investment strategy work, it means that there's a certain level of risk baked into their approach.
It's unavoidable.
Right. And so as an investor, you have to be comfortable with that level of risk if you're going to buy into Berkshire Hathaway.
Absolutely. And I think it's something that every investor needs to think about for themselves.
Mm-hmm.
What is their risk tolerance? And does Berkshire Hathaway fit within that?
Absolutely. I think that's a great point to end on and something for all of us to think about as we continue to explore the world of finance and investing. Thanks for joining us on this deep dive.
You got it.
See you next time.